Well, if you see in the last 3 months, IndiGo's share prices have gained nearly 28%, making IndiGo the biggest gainer in the Bloomberg World Airline Index. Now, these gains are largely on the back of the fact that its dominance has been continuously increasing in the domestic space. Now, it is not only the largest airline, but this has been aided by the recent Go First shutdown and the SpiceJet's issue that it has been facing regarding the airline, regarding the fleet size. It has not been able to ramp up its fleet, which has given IndiGo the leeway to further increase its market share in the domestic space. Along with this, the first quarter of FY24. Now, first quarter usually a stronger quarter because of the holiday period, and this has been further aided by the stronger yields that we have been seeing in the industry. On a Q-on-Q basis, the yields are expected to rise at least 5 to 10%, and this is largely in the back of the Go First shutdown. Along with this, on the cost side, if you see, fuel cost has been continuously lower for the last 3-4 months, which has been aiding the company's cost, because fuel is the major cost for an airline. Nearly 40% of an airline is a fuel cost, and the remaining are INR denominated. And both these factors are pretty much stable, which is also aiding IndiGo. Along with this, the air traffic, now that has been continuously rising. Now, first quarter FY24 so far, if you see the air traffic sequentially, it is up 3%, but on a YOY basis, the air traffic is up nearly 20%. Along with this, the company has also been focusing more on the international routes, which means the margins could be much higher for the company going forward. And if you see the balance sheet of IndiGo, it is one of the strongest in the Indian space. It has a free cash of close to 12,000 crore rupees. And also on the longer term basis, if you see, the company has a strong growth plan. It plans to double its fleet size by 2030 from 304, which is the current fleet size. It will be 600 plus, which clearly shows the kind of growth plans that IndiGo has going forward. On the risk side, there's only one bigger risk, that is the increased competition, and that is only coming in from the Tata Group, because they have also a large plane or large aircraft order in place. So that's the only key risk for IndiGo going forward. And the second key risk, which is more of a technical side and not fundamental, is the fact that the Gangwal Group, which is one of the promoters of IndiGo, is looking to pare down its stake. Currently, they hold close to 29.7% stake in the company, and they aim to completely exit from IndiGo. But do remember, this stake sale won't happen at least before July, because in Feb they had sold close to 4% stake, and there was a 150-day lock-in period. So that ends in July, and before that, there won't be any stake sale coming in from the Gangwal Group at least.